I've had a lot of people asking me lately, Hans, I thought all the rates went down. Why is my refi higher than what I have currently? Well, if that's you, I have the answer because I sat down with my buddy Hunter Marckwardt to answer that exact question, and we're starting with that right now. Hey guys, Hans Strazina with the Gunderman Group here, coming to you with another video, this time talking about the mortgage lending interest rates. I obviously am not a lender, so I went and sat down with my buddy Hunter Marckwardt. We did a Facebook Live about this a few days ago, so I've downloaded that, cut it up, and taken the best content out to answer the question, what is going on with mortgage rates? Because most people thought they were supposed to go down and not up. So we answer that question as well as what the implications are for the market and what it means to you ultimately at the end of the day. So I hope you get value out of this one. And if you do, consider subscribing to the channel, hitting the bell so you won't miss any other quality videos that I put out. And without any further ado, let's just get into it with Hunter.
All right, Hunter, thank you so much for taking a few minutes with me to sit down and chat. We've been trying to connect for a while, and gosh, a lot of craziness going on out there. And I was hoping we could just come together and have a quick chat and hopefully answer a few questions for people in the marketplace right now, and just give a little bit of perspective on what we're both seeing. So for those people who don't know, can you give a quick introduction of who you are and then we'll dig into some of what we're seeing out there in the market right now.
Sure. Yeah, I am. My name is Hunter Marckwardt. I'm with RPM Mortgage. I'm Hans's, one of hopefully the lender for Hans and the Gunderman Group. So, and obviously as business partners, we just talk a lot about what's going on in this world right now, and whether or not we're obviously the virus itself. And certainly I feel like every time I even say that word, like you want to wish everyone that's watching well and hope everyone's doing okay out there. But yeah, how the virus has impacted, it's impacted obviously everybody in everybody's lives in various perspectives and scenarios and situations, but certainly from, our worlds are real estate and lending. So we're deeply focused on what it has done to our worlds, which is, it's bottom line is it's chaotic, and we try to working our best to create some calmness in a world of chaos, but it is what it is. So anyone that says that it's not chaotic right now, I don't know what they're doing, but it's not what we're doing. So just call a spade a spade.
Man, we talk about this all the time, and in sort of our quote unquote normal times when you and I have gotten together for coffee, we've talked about, obviously this is a people business first, obviously our relationship with our clients, the other side of a transaction, it's all people driven. And so I love that you sort of led with that with, this is a health situation that we are monitoring closely. We're trying to all do our part to make sure that everyone stays safe and healthy. And I think that's first and foremost, especially when people know that we're going to go live and talk about the market. So, on our side, we've obviously shut down all the open houses, private showings. Some agents have leaned into sort of the virtual world and trying to figure out how to get old photos if they have a listing coming up that a seller absolutely needs to get on the market, and being creative in that way. But it's really put a substantial damper on the way business is done. And one question that I've gotten a lot from just people casually or who are engaged in the market actively is like the rate question. Everyone saw the Fed funds rate go down to 0, and then the stock market's gone up and it's gone down, it's gone sideways, it's all over the place. But I was hoping one of the big questions you can answer for us, and maybe you can't answer it, but like, what is happening with the rates right now, and what are we looking at?
It's a great question, and it is hard to explain right now because everything that is normally correlated isn't necessarily correlated right now. I think it will be over time, but when the Fed comes out and announces that they're taking interest rates down to 0, for one, that is not a 30-year fixed mortgage. So when they say they're taking rates down to 0, that's literally the overnight basically rate at what banks lend each other money. So it absolutely should push interest rates down And by the way, when we say interest rates, we're talking primarily like with what just happened. They said that they took the interest rates to zero. Then they were going to pump they just did this $2 trillion announcement, but before that it was a $750 billion announcement, of which a half a trillion, 500 million, was going to be going towards the purchase of was going to be going towards treasuries, and then the other 250 billion was going towards mortgage-backed securities. And when we say mortgage-backed securities, it's a very defined group, which is Fannie and Freddie products, which in our market is important because those max out at $765,000. Mm-hmm. So anything above 765 is a different product set, which is on the jumbo side. And that has also been very disrupted. There's a lot of questions and just uncertainty around that. So to answer the question on rates, we would like to believe that interest rates will come back down, but they have not, even with the stimulus. It should happen over time. But just to give you, Hans, like an example of what's happening, lenders, there's servicing companies, right? So you get your bill, someone else might actually own the loan, but the servicer is the one that sends the payment. They collect the payment. They collect, yep. If you have an impound account, they collect your taxes, your insurance. Like on an FHA loan, as an example, when the government comes out and says that they're going to help homeowners by, you can, if you were impacted by the virus, that you can skip payments for 6 months. On an FHA loan, the servicing company still has to send, even though the end client chooses not to send in the payment, the servicing company is still responsible for sending that check on a monthly basis at the same time to the end user. So when all of a sudden the government comes out and says that they're going to help homeowners by allowing them to not make mortgage payments, it crushes the servicing companies because now now they have massive cash flow issues because they're literally, I mean, I think the last number was potentially like up to $750 billion of payments that still need to get made. So it's just, there's these ebbs and flows that every time you pull one lever, like even with the best intentions, it has negative consequences on someone else. So why that matters to interest rates is you have interest rates being done now, but the end investors are going, why would I want to own that loan knowing that people cannot make payments? We don't know whether or not people are going to be making their payments. We don't know whether or not interest rates are going to continue to go down, because if interest rates continue to go down and these lenders are paying money for the loans that they hope to have on their books for 3 to 4 years at a time, and all of a sudden that loan pays off in 3 months or 6 months, those are horrible investments for them. So instead of saying that they're out of business, and some of them have said we're out of business, but instead of saying that we're out of business, they just take interest rates up, which is why we're seeing a huge disconnect. So it's like, bottom line is you have the government just coming in, trying to do everything they can to help, but I don't think I'm sure they understood, but the unintended consequences of what's happening on the lending side is what's being recognized right now. And I saw it on CNN this morning, the $2 trillion package is going to turn the mortgage side of the business upside down unless there isn't some form of relief for these servicing companies. So long-winded way of me saying, when there's total chaos, lenders just retreat because they don't know what they don't know what they're holding, so they just try to hold nothing. So anyway.
And it's my understanding that like when a lender writes a loan, and then you said something about they turn the loan over in 3 to 6 months, that means typically a buyer who used that loan to purchase their property will then refinance that loan or pay it off in some way.
Right.
And then there's financial repercussions for that original lender typically. Yeah. And that's what they're trying to avoid. And that's why they're raising the interest rates. Is that what you're telling us?
Yeah. They take the interest rates up to a level that basically disincentivizes anybody to use them, or they're not willing. Like another example, and this is pretty complicated, but like when you're the servicer of a loan, you might pay a couple of points to own that loan, and you hope that over the course of a 4, 5, 6 year period of time, the payments that are made, that they have a fee, and that fee is about 0.33% or 0.25% annually to service that loan. Okay. So if all of a sudden, if you were to say, you paid 2 points for that, you're going to make up for that in the long run. But in the first couple of years, if that loan pays off, you paid for the money, you paid for the servicing rights up front, but then the loan went away, right? And all of a sudden you don't own that loan anymore, and you worked at a loss. So when you see the interest rates that are so volatile and they don't know where they're going, they just retreat. They just say, we don't want to be a part of this right now, which is what there are other components that are happening behind the scenes, but that's one of the primary reasons. There's also just the fact that everyone wants to hold on to cash right now.
Right. And that what you're describing is basically a simple time value of money equation of like, what if I pay you X today, what do I have to get over the next 5-10 years to make that positive in value to me to do? Right. And the lenders effectively are saying, like, most of these are showing a negative net present value. So if I pay you $1,000 today, I think that I might end up losing, 1,100 of it or whatever, if this loan pays off early, which it looks like it could. And that's why they're raising those rates.
Correct. And then on the other side, too, on the FHA, on the government side of things, you don't want to be the servicer of just call a spade a spade. If you have to front the money for 3 to 6 months of mortgage payments when they're never even made by you're not getting the money, but you're having to write the check for the money, it's not a good proposition for the servicing company, right? So people don't want to own, like if you looked at an FHA loan today from a pricing perspective, my guess is you're going to see an interest rate in the 5% range paying, I haven't looked in a little while, but probably paying points to get that kind of an interest rate, which just means lenders are saying, I don't want to do that loan right now. That's what at the end of the day, they're not going to say that we're closed, but they just take the rates up where it's not attractive.
The key here that we wanted to talk about is like some of the challenges we're facing, yes, but also the fact that there are solutions, there are ways to get things done currently if the need arises.
Totally.
And now the conversation that we, Hunter, myself, any other real estate professional, lending professional out there is going to have with a client is going to be very different than it was 3 weeks ago. But that doesn't mean that it's a non-existent conversation. There are still ways to make things happen for folks who need to have that done.
Yeah. I agree with you 100%. I think we still need to keep going, right? This will come. I know it's, feel everyone, you hear it 1,000 times now, but this too shall pass. Right. And I think the people that didn't just put their head in the sand for whether or not it's 3 weeks or 3 months.
Yeah.
So,
and only you who's listening can answer that for yourself. Like that, you have to look at your own risk tolerance, your own financial situation, your own goals, and really stay true to that. I gave someone this advice the other day. It's like, if you can protect your mindset, you can keep your head screwed on straight, focused on your goals while keeping in mind, the parameters in which we're operating in. You'll come out of this better than when you went in. If you, like you said, put your head in the sand, get in the fetal position and watch Tiger King on Netflix for the next however many weeks, I don't know what anyone can do for you at that point. But if you can see this as an opportunity, because every shift represents opportunity, and that opportunity comes in a different package often. But if you get the opportunity to see it, and depending on what that means, maybe it means sit still, maybe it means make a move in some way. But if you're ready for it, you can do very well in these moments. So Hunter, man, such a great resource. And thank you for explaining some of that stuff to us, because it really, really helps us gain some clarity.
Yeah. And it will be a whole different week next week. So Hans, I appreciate you talking to me. So yeah.
Absolutely. So Hans and Hunter signing off for now. Have a good weekend. Stay safe, stay healthy, everybody.
Thanks, everyone.
Hey guys, thanks for tuning in. Appreciate it. Hopefully you got something out of that. And if you did get value, please leave me a comment below. Let me know what kind of questions I should have asked Hunter, what you'd like to know more about, and what future topics I can do videos on, because I'm going to keep bringing this kind of content to you every week here on the YouTube channel. So hit subscribe, hit the bell, and make sure you don't miss a single minute of it. So without any further ado, this is Hans Struzino of the Gunderman Group signing off. Have a good one.